Dixon Tech is the stock in focus. The EMS player has been in the news for a lot of recent corporate updates. They're completely leveling up on various aspects of their broader plan to be an end-to-end player. Now, let me get in Varsha on the key updates that have come in the last 24 hours.
Yeah, thank you so much for that. So as you rightly said, companies in focus on lot on the back of lot more of updates. Let me start with the first one, wherein they've entered into binding term sheet with Chongqing Yuan, which is a Precision Manufacturing Limited. Now this JV is to manufacture and supply precision components for laptop, mobile phones, IoT, and any other products. Also, the second update, if you see, they've entered into binding term sheet with Q-Tech India. Now the proposed acquisition is of 51% shareholding in Q-Tech India, and the purpose for this collaboration is to manufacture, sell and distribute camera and fingerprint modules. Now why this is important? Because this will due to this, Dixon will foray into development and production of camera modules and fingerprint recognition modules. On to the last update, wherein the company has executed SPA with DTSPL and a JV to subscribe 2.5 crore equity shares of JV. Now they've entered this a binding term with Signify Innovations India Limited, which involves transfer of the lighting business to the company, and the entire stake in Dixon. This will be a transfer of lighting business to the company, which is an entire stake in Dixon Tech, and this transfer by if you see this signifies of its business undertaking, which comprises LED lighting, manufacturing operation at its factory in Vadodara.
Okay. Thank you so much for that, Varsha, and putting it all together, because that sets us up perfectly for this conversation with Saurabh Gupta, the CFO of Dixon. Saurabh, great to speak with you as always. Now, a couple of things you guys are doing. One is the Q-Tech deal, which puts you in good space for the camera and fingerprint module segment. Then lighting OEM is the other one that you're looking at. Let's start with what the larger plan is with these three specific announcements that have come in.
Yeah, so basically, as we have been always guiding to our investors and also to on your channel, that our focus now, we already have a very large play in mobiles, and going forward, we will have a large play in the IT hardware segment. So the idea was to deepen the level of manufacturing, get into the backward integration. So one, we had signed with HKC on the displays. Displays were mostly for mobiles, IT hardware, TVs, as well as automotive. Now this partnership with Q-Tech, which is a Indian subsidiary of a Chinese company, we will take a majority stake in this company. They are into manufacturing and supply of camera modules and fingerprint modules, and clearly we pretty much have all the customers in the Android ecosystem. So, and they supply to all those brands. So we buy a majority stake as part of our backward integration strategy, so that we are able to offer those camera modules to our set of customers.
There is a partnership with Chongqing Yuhai. I hope I'm saying it correctly. There's Q-Tech. Just Saurabh, any concern at all? Because these things tend to become, geopolitical concerns and flare-ups all of a sudden on the kind of stake these Chinese companies will have then in the JVs. It goes into privacy, data protection, etc. So are those guardrails in place?
Yeah, there will be enough guardrails. This company has been already operating in India, Q-Tech, and there is no government approval which will be required for this particular transaction, because you're buying an Indian company, a company which is operating in India. So there's no such approvals which are required. As far as the other JV, potential JV of this Chongqing Yuhai manufacturing is concerned, machinery is concerned, which is basically for precision components for mechanicals and metal parts, again for mobiles and IT hardware largely. So there it will be a 74-26 JV, and that would of course require the approval of the government under the Press Note 3 guidelines. And we will of course apply for our approval. We feel confident that government has been very forthcoming in giving those approvals. Of course, there are certain broad conditions that the Indian company should have a kind of a majority in that particular JV. There should be some kind of a transfer of technical competence or technology which should happen. So we feel confident that, of course, it will follow its own due course, but we feel confident that we should be able to get these approvals.
What is the timeline for those approvals under Press Note 3? Because these are, the intention has been obviously conveyed by you, Mr. Gupta, but then it is dependent on the approvals from the government under Press Note 3, isn't it? What are the timelines for this that you see in place?
So QTech, as I mentioned, there's no approval required, so we should
Yeah.
start consolidating those numbers from Q3 hopefully. The next few months we should be closing the definitive agreements with them. As far as the this other JV is concerned, I think so they should take another 6-7 months to get those approvals, and so we expect that those numbers should start reflecting in our numbers from next financial year.
Just one more question on this China JV bit of it, Saurabh, before we move on to other aspects of what Dixon's broader plans is. We've talked about guardrails from a governmental policy standpoint, but what about you as a company? And I'm just referring to what happened with Foxconn a few weeks ago when suddenly their engineers and their technicians, for whatever reason, had to leave. When you're looking at that transfer of technology, are there enough guardrails for you internally in these JVs?
Yeah, we think we'll have enough guardrails that will be factored into the agreements. And please understand, for them also, it's a decent kind of a part. It's a good partnership because we bring in the customer access to our own customers. We give them a large order book of our customers, and clearly, of course, we get access to their technology. We get access to their talent pool. We get access to their high precision manufacturing. So I think so it's a win-win situation, and enough guardrails will be built into the agreements. And I feel that the government will be forthcoming in giving those approvals. Of course, it has to follow its own kind of a due diligence at the government's level, but we feel confident about it.
Saurabh, good morning. We may not be able to talk exact numbers, but the one thing, Saurabh, that people think about, and increasingly I've seen that in notes, in conversations with fund managers, etc., is that with the base and the size that you have, plus the competitive intensity increasing, it's a given that you can't have the pace of growth that you probably had in 18, 19, 20 or FY21, if you will. But could there be a significant slowdown in the pace of growth, even if you try to manage the return ratios, etc.? Could that happen as a natural evolution of Dixon as a company with the size that it has achieved now?
So Neeraj, one, we feel there is a large opportunity for everybody. So if you look at India sharing global EMS space is just 3.5%, and a lot of analysts, a lot of reports have projected that this number can go to, say, almost higher single digits by 2030 and almost 19-20% by 2040. Clearly, we see a lot of tailwinds internationally. Given the way it is happening globally, a lot of tailwinds for India, government policy framework for India. So Neeraj, one should definitely make a note that there is an opportunity for everybody, and Dixon will not get everything which is there which is available. So we feel that given the kind of investments that we are making in backward integration, in systems, in people, in also building up a great infrastructure, I would say. We feel that we are better positioned compared to some of our competitors to take advantage of this opportunity, largely in mobiles, IT hardware, and we've already got that first mover advantage by getting all the customers on board. Now we are getting the first mover advantage by getting into this backward integration play of displays, camera modules, this mechanicals, and metal parts. So we feel that, and we have a strong balance sheet, so we'll continue to invest in that business. And I feel confident that our relationships with most of our partners are very strong. And some of the partners, some of those relationships are also happen through a JV or a acquisition or partnership kind of a mode, where I don't see them basically shifting to any other player. So we feel that lion's share of business of all those brands will be with us. Yes, some part of that business as part of the brand's de-risking strategy can potentially go to our competitors, but we feel confident that if suppose last year numbers was almost 39,000 crores, we feel confident that in next 2 years, this year as well as next financial year, we should be able to almost double our revenue numbers.
Well, Saurabh, we're looking forward to talk to you more, and keep up the great work. Thanks so much for talking to us today.
Thank you, Neeraj. Thank you.